Welcome back for the Q&A part of this month's Legacy Planning webinar, focused on options for long-term care funding. I'm John Mitchell, and I serve as Executive Director and CEO of Ardenwood here in San Francisco. Thank you again for participating in this 6th-part series and for joining us today. It's very gratifying to hear from many corners of the country that these webinars and the replays are proving to be informative and helpful. We hope they are encouraging you to plan, prayerfully listen, act now. As a reminder, you can ask questions using the Q&A button at the bottom of your screen. Only we will see the questions. And finally, the content shared is only informational, is not intended to be legal advice. A replay of this webinar will appear on our website tomorrow morning. Now, let me reintroduce Rick Bailey and then introduce Katie Burris, who is standing in for Jim Maher today. Rick Bailey is the founder and chairman of CAMUS and is one of the most highly renowned estate planners in the United States. As a certified financial planner, or CFP, with a master's degree in accountancy and taxation, as well as a Juris Doctorate, or JD, law degree, Rick Bailey is a highly valuable asset to private clients, CPAs, attorneys, financial advisors, and life insurance professionals for his expertise in advanced estate planning and case design. Katie Burris is a Medicare specialist and certified long-term care consultant who helps individuals with their Medicare and long-term care planning strategies. She does this by focusing on the issues they face and using insurance products to help protect and preserve their wealth for their families and charities. Katie is a partner at McGrew and Maher Insurance Services and has been in the business for 17 years. She is licensed for life insurance, long-term care, and Medicare in several states. Katie has been married for 14 years to Brian, her high school sweetheart. They keep busy with their 2 daughters and 3 dogs. Welcome, Katie. Now, I have a number of questions from Tuesday's session, so let's get started with them. All set?
Okay.
Okay.
Yep.
First up, I'm 70 and have a John Hancock long-term care policy that I've been paying into for 14 years. The rates keep going up. I don't know if I should keep it. How do I tell if I can use it at Ardenwood?
Probably the best thing to do is to have it reviewed. So that's one of the things that we can help with. We want to, if you get us a copy of the policy, we'll go through and help you understand exactly what you have. And we want to make sure you understand what you have. Can it work for you? The other thing that we would do in that is we would also look and see, are there any other options that may be better? And even though you've paid into it for 14 years, we want to make sure that going forward, it's going to be the best thing that you can have.
Correct. You don't want to keep throwing money at it if it's not a good opportunity for you.
Yeah. And these things, as you've said in previous times, they change over time. And so it's like having an older model vehicle, perhaps, maybe if that's a good metaphor, that there are more improvements that you can get by trading up, if you will.
Yeah, and I think, looking at that car example, do you keep fixing the old car, or is it time to, trade up? And same thing's going to happen with long-term care policies, life insurance, annuities. All of these, sometimes the best answer is keep what you have. And if that's the best answer, we're going to pat you on the back and say, keep it. If we can improve it, we want to show you what it can do. And then you can decide, is it better to make that change? And we don't want to just jump from something because it doesn't feel comfortable to something that may be worse. We want to make sure that you understand what you have, understand what you bought. And that's probably one of the biggest things I find is most people don't understand what they have. And so we want to help you understand what you have, then see if we can improve on it. And so it's not jump too fast. It's review it and then move forward.
Excellent. Question 2. Everyone tells me that annuities are not good, that they cost too much. I have some money invested, I have some money saved in CDs. Is it a good idea to look at one of those policies with the long-term care benefits? I have sufficient assets. I don't want my wife to take care of me.
Couple good questions in there. Probably the first one, let's take the first one. Annuities aren't good, aren't bad, they're just a tool. So a lot of times when we look at these different financial tools, it's what does the strategy do for you? So when we look at annuities, and I hear this from people, some people love annuities, some people hate annuities. What I like to look at is what does it do for you? And so every annuity is different. Every annuity has a different goal attached to it. And so we want to look at it and see, can this help? Now, what we've been talking about with the long-term care annuities, the goal is to provide the long-term care. That's the ultimate goal of that annuity. Now, the nice part of having that annuity is if we can get the long-term care coverage. Two, if you pass away, your family's going to at least get your premiums back. Maybe more, but they'll get that money back for the care that wasn't ever used. And then if things change, and we know we can do the best planning ever, but things can change personally, things can change in the economy. And if things change, can you get your money back out? And having that ability to walk away with your money, that's a great benefit. And
Great
so,
peace of mind to have.
yeah, what I look at is, what we never want to do is paint ourselves into a corner. And if you picture yourselves painting the floor and all of a sudden you end up in the corner, how do you get out of it? We always want a door behind us. And so the door behind us is we're either going to use the care, our family's going to get the death benefit part of that back, or if we need to walk away for whatever reason we can. So it's having those options available. The other part of that, should you change your current CDs and savings accounts into a long-term care policy? The answer is maybe. The answer is, one, we want to look at your current situation. How much do you have? And can we do something better? We talked Tuesday about leverage. Leverage is just taking $1 and turning it into $2, $3, $4, $5. And if we can do that, if we can take $1 and turn it into $3 of long-term care, and that's the goal, then I would say, yes, make the change. Now, if it's one where you're looking at that and saying, I need that CD or savings account to cover living expenses, then that's probably the bigger priority. So we always have competing priorities, competing goals. And so we want to prioritize them and come up with the best options.
Great. Number 3, I have a life insurance policy. It's whole life that I've had for quite a while now. I wasn't planning on using it, just to leave it for my adult children. You mentioned about an exchange from one life insurance plan to another. Would I be able to do that with my policy? I'm 73 and in very good health.
The answer is, from a legal and tax standpoint, yes, you can make that change. And the tax code's set up to allow us to exchange that tax-free from one life insurance policy to another. And so we know that's available. Now what we would want to do is look at, can we do something better? Kind of back to the first question we had is, let's figure out what you have first and see if that works for you. Because there again, if that's working for you and satisfies all of your goals and needs, great. We don't need to make the change. But if we can come up with something better, and it's one where when I first got into the industry and life insurance, probably 65 was considered old for life insurance. Now we can insure up to 85, and people are living longer. People that are taking care of themselves are living healthier, and the insurance companies have adjusted for that. So with your age, the answer is we might be able to do something better, but we don't make that change till we know we have that something better in place.
It's kind of like those old flip cell phones where they work, but we have iPhones. And if this flip phone works for you, great, but the iPhone might work. So it's kind of like where the insurance has changed over the years as well.
Excellent. Great. Number 4, I have quite a bit of money in my IRA. I really don't plan on using it except when I have to take the required distributions. I was looking at that chart on the IRA and life insurance. If I want to get more information and see that it would work for me, who do I talk with?
You can talk with all three of us. What it is with the IRA, and if you were to reach out to me, what we're going to look at is how much of that IRA do you need? And that's our starting point. So if that's money that you need to live on, let's figure out how much of that IRA is going to account for that. Then we can look at, now, can we, and does it make sense for you to start moving that excess IRA over into the long-term care or life insurance? And so it really is, taking a step back and making sure what your goals are first, how much is in the account second, and then design the plan going forward. So it really is, it's just making sure it's a fit. But if you've got that excess IRA, and I see this a lot, people talk about retirement and planning for retirement. Think about climbing up the hill. More people die on Mount Everest coming down the hill than going up the hill. Well, retirement's kind of the same way. Everybody plans on getting to retirement, and then nobody talks about how to spend the money in retirement. What we want to do is help you use it more efficiently. There again, meeting the goals that you have. If you're going to leave it to family, sometimes, we can take that into life insurance, go ahead and check the box for long-term care, and then leverage more to our family with life insurance than they would have gotten from the IRA. So we can accomplish multiple things there, but it really is stepping back and seeing what you need first.
And we find that a lot of donors are giving from their distributions directly to charities like Arden Wood, which is really nice because there's no tax issue there. It just is issued right from the who's administering the IRA. But there are many different ways to look at this, aren't there?
Yeah, and we've got, taxes do drive a lot of these decisions, and I like that if people are giving to charity, a lot of times they're not doing it the most efficient way possible.
Exactly.
So if they can give from the IRA to Arden Wood and then give life insurance or other assets to their kids, that's a win-win for everybody. And every April 15th, you're going to appreciate that little tidbit.
Exactly. This is where this good information and planning comes into play. Thank you. Number 5, you keep talking about Christian Science friendly policies. What do you mean? I have a long-term care policy with Mutual of Omaha. Is that Christian Science friendly? I want to make sure I have the right one.
Mutual of Omaha did have some policies that were Christian Science friendly. So the answer is you might have the right policy. The best answer is let us look at it and tell you exactly what you bought. Mm-hmm. So when we talk Christian Science friendly, it's really having a policy that allows you to use the money where you want and how you want. So when it comes to long-term care policies, there's really 2 types. There's direct reimbursement and there's what they call indemnity. So a direct reimbursement is they write the check direct to the facility. And so it has to be a qualified facility, a licensed professional, and those policies are not Christian Science friendly.
They're a lot more restrictive for sure.
Yeah. And that's the thing. They're deciding how you use it. And so a lot of them are qualified licensed medical facilities. And let's just go to a family situation. If you want your niece to take care of you for long-term care needs, and your niece is not a licensed professional, if it's a direct reimbursement policy, Yes, she can take care of you. No, she can't get paid. Now, if we go to an indemnity policy, and that's just a fancy word for they give you the check. So each month they send the check to you, put it into your account. You decide how you want to spend it. So now if you want to go to Ardenwood, if you want to have your niece at home taking care of you, however you need, however that care is, envisioned for you, you have full and absolute control of that money. So that's why we want to make sure that it's Christian Science friendly on the back end. Now let me go to the front end. Some companies are not Christian Science friendly because in the underwriting, they want to see medical records. And so if they don't see medical records, their assumption is something's being hidden. And we want to make sure that we're working with companies that are looking at you for the healthy lifestyle that you maintain. And that's a positive, not a negative. And so we're looking at it from both the front end and the back end.
And then Rick, Jim, and myself have all looked into, that's one of the things we consider anytime an insurance company talks to us about the products that they have, is we always want to make sure they are Christian Science friendly, because the last thing that we want for you guys to have to do is to make compromises to the care that you receive because an insurance company says that's the way you have to get your care.
Interesting. I just have a question, just as you were talking, and I think we've touched on this before offline, Rick, but and Katie, what percentage would you say of people really know what's in their policies?
Zero might be close.
Wow.
It's very, very few understand exactly what's in there. They might remember some of the things that they were told, and their memory may have faded a little bit, or it was just glossed over. And so I come across, I would say very few understand what they really have.
And what we've seen particularly is it seems like a lot of Christian Scientists, especially when agents are talking with them or people are trying to sell them something, they're telling them you can use it at the facility, you can use it where you want. And that's not the case in some of the people we've talked to. And that's really sad and both frustrating because they were told that it was fine and it worked that way. And so we would just want to confirm that that is, in fact, the way it works, so that there's no surprises when you need the care.
I love that. That's exactly what we need. Yeah, absolutely. Excellent. Number 6, I have an IRA and want to leave it to my children. I'm 75 in excellent health and want to make sure I'm doing the right thing. I'm now concerned about the taxes. How much tax will my children pay? Is it all taxable to them? I'm a bit confused on how that all works.
The answer is yes, it is taxable to them. So if you have a traditional IRA, and think about this, if you take the money out, and the reason most people don't take it out and just do the required minimum distributions is they don't want to pay the income tax. And so they pass it on to their kids. And when their kids take the money out, their kids are going to pay the income tax at their current income tax rates. So if you think tax rates are going up, your kids are going to take that out in a higher marginal tax bracket. And so that's part of it. Now, if you have an estate that's large enough for an estate tax, that IRA is taxable for both income tax and the estate tax. So if you're in a state like California, where it's a high income tax state, they'll pay the federal income tax rate, the state income tax rate, and there again, it could be subject to a federal estate tax as well. So when you're looking at planning, it might make more sense to take more out during your lifetime than it is to pass that to the kids. So if you think about some of the planning we can do, we can start taking more of that IRA out now and put it into life insurance. Life insurance, one of the big benefits of life insurance is it passes income and estate tax free if it's set up right. So now that benefit passes, we don't have to worry about the income tax. The kids don't have to worry about the income tax. Let's be honest there. And so it might make more sense from a family standpoint to do a little bit more tax planning now than giving it just to the kids and letting them, having to deal with that at their rates.
I'm getting excited by this because this is kind of fun. I mean, to really take something, and I love that word leverage, and you're really saying, wow, what could we do with this rather than kind of a static existence? Let's look and see what the options are. This is really fun. Yeah.
And that's the thing is we want as many options. And what I tell people in the planning process, this is a team approach. And as we come through this team approach, first, we've got to understand you. We want to, and sometimes I've got to pull some of those goals out of people because they've never been asked, how do you want to pass things on? What's important to you? Yes, they've thought about it, but maybe they haven't verbalized it. So we want to make sure we understand your goals, objectives, who it goes to, how you want to go. And if you think the legacy, what do you want to be remembered for? So once we get that, then it's to bring the best options available. And some of those are competing options. And now the job for our client is to make a decision that's best for them. So we want to get it down to it's best for them. And we want them to understand exactly what the choices are. So that, a year from now, 10 years from now, instead of wondering what you have, what you have.
Get it out of your head and onto paper and make it happen. Yeah.
Yeah.
Love it. Number 7, I do have annuities now. I really don't plan on using them. They don't do much, but the values keep going up a little every year. How do I know if they have the long-term care benefits? Can I trade them in for ones that do? I'm not sure I need any more annuities, but I want to make sure I have the best ones in case I need care. Good question.
It is a good question. It really goes back to understanding what you have and what the goals are for what you're doing. And so if you have a current annuity, what we want to, there again, to figure out if it has long-term care benefits in it, we just need to review it. And so once we see the policy information, there again, we'll help you understand what you have now and what it's doing for you. And then can we improve it? And it's one, if we can improve it to one of the long-term care annuities, yes, we can exchange that from the current annuity to the new long-term care annuity. What we will look at is there a surrender fee in the old policy? If there is, we want to make sure how much that is and how that affects your decision to change to the new one. And I go back to, I did that with my dad. With my dad, he had an existing annuity. He said that would be to cover his long-term care. But when I went back and reviewed that annuity for him, it didn't have any long-term care benefits to it. So any dollar that he took out of there would be taxable, just like an IRA would have been. And we were able to exchange that tax-free into a long-term care annuity. And right there, we tripled the benefit for his long-term care. So instead of having $200,000 now that he thought was his long-term care bucket, now he has, 3 times that amount or $600,000 available. So from my side, as son looking at being the one to help take care of dad, now I have $600,000 available to make sure he's taken care of the way he should be. So
wonderful.
But there again, it's just looking where we start with where we're at, and we've got to understand that, then we can make decisions going forward.
And Rick's right that people's needs change. I see a lot of times when people have annuities, it's because they wanted the income in retirement. And then a lot of people get towards retirement and realize maybe I didn't need the extra income. I have more in a 401k or an IRA than I thought I was going to have, and I'm using that, or I just have more in savings. And so that's when we can really look at the annuity and see, is there an annuity that's got long-term care coverage if you're not going to need that for income, or we can even have more benefits than you have now.
Question, do a lot of annuities have surrender fees?
Yes.
All annuities for the most part will, and let me just say, all annuities will have a surrender charge. And it's usually a declining surrender charge from when you bought it.
Okay.
And if I had to guess, most of them are going to be around a 10-year surrender charge. So declining. So we want to make sure that we know what that amount is. If there is a surrender charge, how much, because that needs to go into the decision. We don't want to go backwards. We want to make sure that whatever we're doing is really moving forward to achieve the goals.
Absolutely. Number 8, I'm a Christian Scientist and my second husband is not. He is worried about needing care. He has a small life insurance policy now. We are both in our late 70s. He has money and I have assets, but I want those to go to my children. He agrees with that. Is he able to get one of the policies that has long-term care benefits? As I say, in someone as in their late 70s?
Yeah, we can go up to age 85. And so we definitely at age 77 have options available. And remember, it goes back to qualifications. So as long as he's healthy, and we're not saying perfect health, but good health. And so if at 77 with good health, we've got options available. And there again, back to the competing goals. If you look at the competing goals, how much money do you set aside for long-term care? How much do you set aside for living expenses? How much do you want to pass on to the kids? And so if you start looking at all those strings kind of pull in different directions. So what we want to do, and that goes back to the word of leverage. Can we leverage more in dollars to long-term care, more to the kids, and still make sure that you're taken care of? So the answer is yes, we've got options. And because whether he's a Christian Scientist or not, all these are still available. So we definitely have all of the options on the table that we've talked about. And there again, it can accomplish all those goals.
Excellent.
What we've found is we've been trying to talk to insurance companies to make sure, I know Rick mentioned earlier, that are Christian Science friendly, because we want to make sure that they're not going to have any sort of requirement that you have to have seen the doctor within the last 2 years, or you have to have medical records. And so that's what we're really trying to make sure on these policies, but they still work for people that have seen the doctor as long as they don't have major health issues going on.
Great. Number 9, if I bought a long-term care policy when I was living in Oregon and I am moving to another state, does that matter? I don't think it's the kind of policy you were talking about. Should I look at changing to one that you may recommend for Christian Scientists? I'm very healthy and live an active lifestyle. I don't want to throw good money at something that won't work for me. I was never told I couldn't use this at a facility like Arden would.
That's definitely a loaded question. The first one, moving from one state to another, that shouldn't create a problem, because all of these policies really are designed to be portable. And the only time that we run into some issues is if they were specific to getting care in a certain area. So a certain, group of doctors, hospitals, assisted living facilities, anything like that, so that it was limited. But the majority are going to be portable, not a problem. As far as, throwing, good money after a bad product, there again, it comes back to understanding what you have. And we want to start there, because it's one, if I can honestly say, if the concern is, if you're already concerned that there may be a problem with that policy, that's going to keep you up at night. The only way we can solve that is to go back, review what you have. Really, that's our starting point. Once we've got that starting point of knowing what you have, is that the best policy for you? There again, if you've bought something that's really good, we're going to pat you on the back and tell you it's really good, because we don't want to replace it. We want to make sure that, that good money you've put into it continues to be good money.
That sleep factor is important, Rick.
Sleep factor is huge. and all of these decisions come into that. So if you're in the planning process and you're making decisions that keep you up at night, those are the wrong decisions. These are supposed to be things that calm you and help you sleep because it's taken care of. Now, if you're worried that this policy already doesn't allow you to go to the facilities you want, we need to fix that. And, but there again, we want to make sure if that's what you have and it's working, we keep it. If we can do better, then we'll give you the option so you can make an informed decision of should you make the change. So we don't jump just for the fun of jumping.
I love that. Informed decisions. That's what we're talking about. Great. Next up, I have adequate assets now both in retirement accounts and the bank. I do like the idea of leaving as much as I can to my family and several charities I support. Would it be prudent to look at buying life insurance, even though I really don't need it? I don't want to buy a policy and then regret it in a few years. I'm intrigued by the leveraging you keep mentioning. If I want to get a simple quote, who do I speak with?
Reach out to any of the three of us, because what we're going to look at is, let me take a step back. I think a lot of life insurance is oversold. I think a lot of annuities are oversold. There again, because people were scared into buying it. You think about when you go buy a car. Well, you go on the lot, I want a red car, I want a convertible. Well, all they're selling today is blue cars and hard tops. And that salesman's going to do everything he can to get you to buy a blue car with a hard top, because that's all he has to sell. And some people will be, forced to, pushed into buying that. They'll wake up tomorrow regretting everything that they just did. But they now own a blue car with a hard top. What we want to do is take the planning a little bit slower, take the decision process a little bit slower, so that you can make sure that it's fitting what you want. Now, life insurance, you may come in with a preconceived idea. I don't want to buy annuities. I don't want to buy life insurance. That's okay. Because if that really is the driving, forcing the decision, don't buy it. Now, my job is to explain the options. And if you want to leave more to the kids, and we can leverage that money in a life insurance policy, now I can show you that is the best way to do it. But if at the end of the day, that's going to keep you up at night, don't buy it. I can give you the best idea, but if it's not perfect for you, it's not the right idea or right strategy. But it is one, if you've got assets and you've got more assets than you need, and the goal is to give more to the kids, the grandkids, to charity, then life insurance can be a big factor in there of helping you leverage that gift.
Next up, I am 80 and in very good health. Would I still qualify for a long-term care plan? I'm not sure I need one, but I don't want to be a burden to my adult daughters. They would want to take care of me, but they live in different states. Any advice would be much appreciated.
I think that goes back to the answer is we can go up to age 85 with these options. The older we get, the more, some of the options are eliminated on age, but for what we're talking about, we can go to age 85. What I'd look at is when you start looking at the family situation, is if we can put it into a better position for your kids to help manage the care, not be the care provider, but be the care manager. And especially if they're out of state, you may need to go to a facility sooner. You may need to be in Ardenwood sooner than you would want to if the family was closer. But there again, we want to create the best options for you. And so, the answer is, do you buy the long-term care policy? Yes or no? It really is going to come back to you making an informed decision. And, it's one where we want you to be honest in the fact finding part of this. If the kids are out of state, who's around to help in that, care circle of care that we've talked about before? Who is that's going to be able to step up sooner? And are we going to have to rely on other professionals sooner than we would if the family were closer? And that might drive some of that decision. But there again, there's no right or wrong to this, other than what's right for you and you making that decision, after you've seen what the options are.
What we've seen a lot of times is when people have a long-term care policy, it helps you to really decide your plan of care a lot more than if you're just relying on, say, living off savings or something like that, because it gets expensive. So people go, it's going to be cheaper for me to have to go somewhere instead of if I want to get care at home. So you never want to have to be dictated of your care because it gets too expensive. And that's where a lot of times the long-term care helps, because it gives you the driver's seat. You get to decide where and how you receive the care. And that honestly is what it always boils down to, is you having that ability to make that decision and that freedom to do it, to get the care how and when you want.
I love that, Katie. That really is what it's all about in terms of people. These options provide what the individual wants for their care, rather than have the decision go to someone else. And like you said, Rick, and with some of our previous seminars, about communicate these ideas with your family, include them in this decision so that they're aware of what decisions are being made.
Yeah, I think that's probably one of the bigger parts of this. As you're putting this plan together, if you don't tell the kids what you want, now it's up to them to guess, or they start inserting themselves into it. And it's one where, my grandpa needed care when I was a senior in high school. And it was one where my aunts and uncles and my parents all got together. There was a division in the family. I mean, he probably should have been into some kind of assisted living facility, but they decided, nope, the family's going to give the care. That was the majority vote. And so as an 18-year-old, I was helping to take care of my grandfather, and I can tell you, I wasn't equipped to do it. And it probably wasn't the best care for him, but at the same time, is that what he would have wanted? Well, nobody knew, because he didn't tell anybody what he wanted. It was people voting in the family to decide who was loudest. So it really is, make sure as you're going through this, if you really have specific things that you want to have happen, make sure everybody knows it.
Oh, and you're right, Rick, and that a lot of some people just don't give that the thought of what would I want? How would I want the care? And so it's a good idea to start thinking of, do you want the care at home? Do you want a family member to provide it? Do you have a family member that can provide it? No offense, Rick, but maybe an 18-year-old is not who you want taking care of.
That is not the right decision, just so you know.
So, and I think some people still think of long-term care as, I have to go to like a nursing home or somewhere like that. But it's such a continuum of care, because a lot of people now get it at home. And so that's the nice thing with the long-term care policies, is I can get the care at home. I can have the help that I want to come in. So it's really important, and it's changed over the years. And so to give that thought of how you really want to get care is important.
I've mentioned before, I love acrostics, and I did the acrostic for plan, prayerfully listening, acting now. I need an acrostic for options, because options are so important. Okay. Next up, I don't believe I will ever need long-term care, but I want to be able to stay at Ardenwood. I do have quite a bit saved, and it's now in CDs and a brokerage account. I just worry about how expensive it's going to be. I really don't need that money to live on. If I get a long-term care policy, can I use that at Ardenwood? I'm not quite sure how those policies work.
I think that there's a couple of things that we've got to address in there. One is back to that word leverage. can we take what's in your savings and CDs? And I see that a lot throughout my career. I'll talk to clients and ask them how they're going to address long-term care, and they point to a savings account, a CD, whatever, and say that's our long-term care bucket. Well, if I can take that bucket and increase it 2, 3, 4 times, isn't that better? So that you're getting the care that you want, not just the care that you can afford at the time,
or your family has voted on,
or the family, and we see that, and where sometimes the family's looking at that, and that's our inheritance. The more we spend, the less we get for an inheritance, so the kids can get cheap and not provide the care, get you the care that you really had wanted. So there again, it's having that plan and everybody knowing, but there again, it's, can we leverage to something a little bit better? And yes, none of us expect to have long-term care. I don't ever talk to anybody that's planning on having long-term care as part of their retirement plan, but somehow statistically, it's 70% of us are going to need it. I apparently talk to more of the 30% than the 70%, but it really comes back to, there again, just planning it, and can we do a little bit better on the plan? And the last part of that question is, yes, what we're talking about can be used with Ardenwood. That's one thing we've wanted to make sure is that these policies do fit with Christian Science planning, and especially, being able to use it in facilities like Ardenwood.
Great. Yeah, I just will say in my work here, one of the toughest things I've seen many, many times is that when you see someone who is in need of care, that really is relying on assets and so on, and wants to leave money to their children, their families, and they're thinking, maybe it's just better that I just go on my way than, as in, pass on, rather than get the care that I need because I really want the money to go to my family. Without a plan, it's very difficult to have those discussions, because it's like, no, this money that you've saved is for you.
Yeah.
But they have that tension because they want to support their families. That's a natural thing. But with this planning, we can avoid that.
Well, we can, there again, it's back to a plan. Are you planning, or are we crisis planning? And crisis planning, I always say it's more, the car accident just happened. Now what? And nobody planned for that car accident, but it happened and we've got to deal with it. With a lot of this other planning, whether it's, passing away, whether it's long-term care issues, all of those we can plan for and address it the best way possible. And that's planning. When it comes down to, I don't have a plan, now what? Now it's up to somebody else dictating terms at that time. And a lot of times, a lot of the options have been lost.
Exactly. Next up, I have Medicare Part A and no long-term care plans. How does that work at Ardenwood? I listened to the Medicare presentation and want to make sure I'm doing the right thing. Should I be getting a long-term care plan if my wishes are to stay at Ardenwood? I'm healthy now, but worry that I should be doing something else. No one ever told me about getting more Medicare. Can you advise me on the best course of action?
So on this one, it's a very important distinction between Medicare and long-term care, because we have talked about how Medicare does and can cover you when you go to Ardenwood. It doesn't always cover you when you go to Ardenwood, and then you're left to what Medicare approves. So Medicare has to approve the stay at Ardenwood, and they may only approve it for a couple of weeks, but you may need care for a few months. A lot of times when we're talking about like an extended stay, it becomes a custodial stay. So that's where we always refer to as those activities of daily living. So you need help eating, bathing, dressing, stuff like that. That's where the long-term care kicks in, and you can still use the long-term care at Ardenwood, especially if Medicare doesn't approve that stay, or you've exceeded what Medicare says is an approved stay. So a lot of times those work hand in hand, where if Medicare is not going to cover it, long-term care may cover it. So it's important that, and we can always talk about that with you individually, that it's important to know that it may be good to have both Medicare and long-term care because you have both of those needs.
Great. We've had a very robust series of questions here. I've got just one more, unless anybody online is willing to put one in for us, but this is the last one we have so far. When using insurance with a long-term care rider for Christian Scientists who prefer a Christian Science facility for their long-term care, can the long-term care coverage be used for living at Christian Science facilities, or must the cash value be used for Christian Science facilities? After listening to the Tuesday presentation, I have the impression that the long-term care benefit cannot be used for long-term care at a CS facility.
The long-term care benefit can be used at the Christian Science facility. So it is one, there again, the policies that we're talking about, whether it's a life insurance policy with a long-term care rider, or it's one of those asset-based policies that's either life insurance or annuity-based. All of those that we've talked about, the long-term care portion can be used at an Ardenwood. So now the question always comes up, if we've got a life insurance policy that we're building cash value in, when would we use the cash value? When would we use the long-term care rider? And it really comes back to, it really is up to you on, do you want to trigger that long-term care rider or not? And it's one of those where we go back to those activities of daily living. If you can't do 2 of the 6 activities of daily living, then you can trigger the long-term care rider or the long-term care policy. And at that point, I would probably tell you, go ahead and trigger the policy, the rider. Let's trigger that benefit, because it's going to be a bigger benefit helping you to afford to, be at Ardenwood or whatever your situation is. Now, short of triggering those 2 activities of daily living, we still have the cash value that we can use to cover some expenses. We can use that for, we want to take a trip, whatever it is, we've got that cash value growing there for what if. What if needs, what minimal needs we have. But it's also one, as you start going through that continuum of care, you may need extra help, and we can use that cash value to do that. Then when we can't do 2 of the 6 activities of daily living, then trigger the rider. So it really is one that works along that whole continuum.
Excellent. Well, that's all the questions that we have. Thank you, Rick and Katie, for answering so many good questions today, and they really were good. And thank you, one and all, again for joining us today. We look forward to seeing you next month to address another aspect of legacy planning, charitable remainder trusts, or CRTs. We expect this webinar to be very popular. The dates are Tuesday, October 19th and Thursday, October 21st for the Q&A session. And just to add a little variety to your calendar, our annual Medicare webinar presented by Jim Maher, and Katie, you'll probably be a part of that, is coming up in just 3 weeks. It's on Tuesday, October 12th, for the Q&A then on that Thursday, October 14th. You'll receive an email about these webinars next week, and you can register on our website, ardenwood.org. Please invite your friends. So, thank you and goodbye for now.
Thank you.
Thanks.